So you want to know what's happening with home prices, where are rates headed, and overall, is now a good time to buy or sell? Especially with, is there a likelihood of foreclosures happening? Well, we'll cover all that and some on this month's edition of Keeping Current Matters National Housing Market Update. I'm Justin Martin, and I know that what matters to you is the most important to us. So let's dive right in to what's happening this month in the housing market. Well, thanks for sticking around on this month's edition of the National Housing Market Update. We'll let you know what's happening with prices, what's going on with mortgage rates, and yes, is now a good time to buy or sell, along with no, foreclosures won't be happening. So let's start with mortgage rates and how they have changed over the course of the year. As you can see, from January 2022 to today, we have seen them go from a little bit over 3% to this report was at the beginning of November. As we look at closing out the month, we'll be over that 7%. And as you look at that single slide, this has never happened in a single year before. So overall, we could say everything that's happening in real estate right now is related to rates, but a lot of that was the desire on how do we slow down inflation. So let's also look at exactly what other people are saying about the rates. And as you can see, chief economist with Freddie Mac, the U.S. 30-year fixed mortgage rates have increased almost 4 percentage points in the end of last year. That's the biggest year-to-date increase in mortgage rates over the last 40 years. So for many people, this is a impact, meaning yes, rates have been higher before, but many people are being priced out. And with this having never happened before, we're going to have to use more data to predict what will most likely happen in the short term and then continue to follow that to really have a good prediction of what's going to happen long term. So let's also look at economic research from Realtor.com. With inflation still running at a 40-year high and the Fed expecting a few more rate increases to combat it, mortgage rates will experience upward pressure through the end of 2022. So yes, as we saw some good news on Friday with the inflation report, what did happen overall, though, is we will continue to see mortgage rates bounce back up with the goal of getting this inflation under control. And remember that we can see as inflation starts to get under control, rates will then follow. Not always, but what happened on Friday, you saw rates almost drop an entire percentage point. Now, as you also start looking at overall, while mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. So this is the overall prediction. Will we get higher than 7%? They do believe we may see some upward pressure over the next 60 days. However, as we look at overall, this dramatic rate increase is not going to occur again, and people can start to better understand and stabilize around the new market conditions in housing and look at where their pricing and or budgets align with where rates will slowly go back over time, but will most likely remain the same for a little while. So let's really look at what does that lead. The question that people ask is, well, if rates are going to stay high, inflation's not under control, is there a recession around the corner? This is a great study that we've been following from the Wall Street Journal really since the beginning of the year. And as you start looking at a lot of the top economists and the surveys that the Wall Street Journal provided was, what are the chances of a recession in the next 12 months? And you can see how bullish people were that we would not see or have the likelihood of entering one, all the way down to only 18% of people surveyed or experts surveyed believe that we would. So you can see that a lot has changed throughout this year, not necessarily expected. And so the goal for us is to make sure you can use this data to have a better understanding of what the data means, so then that way you can forecast a little bit more accurately than that of where we were this time last year. So let's also look at, well, if we enter recession, what does that mean? Now that the likelihood is 63% of those experts are predicting that we will enter one, is a recession does not mean falling prices. So as the home price change over the last 6 recessions, you can see is that almost 5 out of the last 6 had 0 depreciation. When you look at the averages, obviously there's much more appreciation. What happened dramatically during the recession of the mortgage crisis was an outlier. Now, again, though, what it will help you better understand is how did that happen? And I have another slide when home prices are the discussion here in a couple minutes. But a recession means falling mortgage rates 6 out of 6 times. So may we see a little depreciation? There is a good chance. However, as we enter recession and we come out of it, most likely what you can see is that we will see a decrease in mortgage rates throughout that period. So as we're entering a slowdown in the rise of mortgage rates, now we should start to expect, not necessarily say that it will happen, but if history teaches us anything, or this clues left for success in declining mortgage rates, it's likely that that will start to happen as we enter the recession. So what are the experts saying about prices, though? Because mortgage rates really are impacting demand. Now, demand, though, impacts pricing, because for most people, the market condition of pricing is based on, are we in a seller's market or a buyer's market or neutral? Hyperlocal market knowledge is going to be important, because this is not going to impact the nation the same way. I'm giving you national stats today to feel more confident about knowing your local market. And for a lot of people, if the nation's not going to be impacted very much, you know how your local market is responding to what's happening within the national market. So let's dive right into what are the experts saying about home prices. And as you can see, Redfin Deputy Chief Economist, for those bearish folks eagerly awaiting the home price crash, you'll have to keep waiting. As much as demand is pulling back, supply is as well, reducing downward pressure on prices in the short run. And what this means is inventory. So yes, as less buyers are out there in demand, unfortunately, less sellers are deciding to list their property as well, keeping the inventory low. So the available buyers out there still are competing with less properties. And as we start to see rates reduce again, what's going to happen most likely, and you tell me, is consumer behavior starts to follow what everybody's doing. And if inventory is not high, we'll be back into upward pricing on home prices due to the fact that there's limited inventory. So let's look right at some of the forecasts. We like to follow 6 major economists and their predictions, so that way it's not only one. As you see, the Home Price Expectation Survey, NAR, MBA, Freddie Mac, Fannie Mae, and Zelman and Associates. We're starting to get a little neutral on what people are thinking. And is it really very bearish or fully bullish? Not quite. You can see 3% appreciation forecast, 1.2, 0.7, 0.2, 1.5, -5. These are all going to change month over month over month over month as we start to go through 2023. The nice part is in spring, all these most likely will be adjusted either upward or downward based off of what happens over the holiday season, as well as those we enter spring where our current inventory levels are. And so it's important for you to know your local market data, so that way you're not just taking national data like this, you're comparing what's happening in the nation here to your local market there. And so as you also start looking at big banks, they're forecasting more depreciation than that of the economists. Now remember, big banks work with a lot of the builders and that of new permits, new builds, new properties versus existing resales. So they're 2 different sectors. However, they do overall impact the climate, but this is where there are some great opportunities in new build communities to find depreciating values. And since it's a new build community, that's not necessarily a bad thing for those that are entering now. Now, as you also start looking at overall, though, home prices to fall and then recover, this is the part where almost everybody is agreeing that the outlook of 2024 and beyond is positive, meaning we have a correction. We need to get through it. As we start to look at how that impacts us, whether home prices keep going up, stay neutral, or maybe dip a little bit. For those that have purchased or owned a home over the last couple years, you received so much. This will be an easy process to get through without a impact to most of your equity. And now you're right back in, as you can see, in 2024, 2025 for home price appreciation. Now, while there might be little statistical difference between a small positive number and a small negative number, there are often huge differences in how they may impact behavior. This we already know. At the beginning of this year and last year, while inventory levels were low and rates were historically low, we saw many people waive inspections, give up their firstborn, pay hundreds of thousands of dollars over the value of an actual home. Well, that's not normal, but that's because the impacted behavior of people was doing what everybody else is doing, and that of where the headlines were. And the real estate market was very, very attractive. So as we start looking at even a small negative number, the challenge with this is that people just do what others are doing, and we don't get more buyers out there. While there's less homes selling, we won't see as much of a correction, again, leading to home price appreciation as we move forward over the next couple of years due to the lack of inventory. So just remember, there's a difference between financial behavior and behavior. And the financial behavior we can see through the data. Behavior, unfortunately, sometimes people make mistakes until it's too late, and now everybody else is doing what the market is suggesting, whereas right now what it's suggesting is it a good time to buy or sell for you? I can't answer that question without a conversation. And every single person's overall goals and time frames will be impacted based off of current situation, opportunity cost, and overall what that intrinsic value is with change. So I definitely would recommend not putting your home buying or selling process on hold. I would wait. What I mean by that is, in waiting though, researching, connecting with your agents, discovering, finding opportunities, because in that wait game is how you time a market. Most people struggle timing the market, so spend time learning it. Now, as we also look at overall though, what is happening with home price depreciation for 5 years, this is coming out of the last recession. What happened 5 years after? You can see, well, what's really interesting after the GFC, Great Financial Crisis, is that you saw a large amount of depreciation over the course of 2 years. And this is a very interesting, knowledgeable slide that most people don't quite understand, but it teaches predictions. You can see that no matter where prices go next year or where they've gone this year, 2024 is going to be dramatically different than 2023, historically speaking. And as we start to see an even playing field, what happens is then we start to see an increase in that of home values. But overall, what it takes, it usually gives back. And that's going to be very hard, though, to give back what it has over the last 5 years in the amount that nobody's really thinking it will be taking over the next 1 to 2. So just remember, looking at things from a 5-year period may be a better way to answer your question of should I buy or sell now, versus looking at real estate short term, which is usually not the right investment for a primary residence. So what about foreclosures is the question we were talking about earlier, which is, will there be them? And that's really most people's greatest concern, is making a bad decision. Not is it the best decision, because for a lot of people, time supports the best decision, not necessarily just condition. So as you can see here, since 2010, the reason why there's very little predictions of foreclosures or anywhere near the level of activity that people hear about or think about is just, unfortunately, the amount of people, qualified buyers that are not in defaults, is extremely low. And so as you can see, in 2007, 8, 9, 10, over 1 million homes were in that of foreclosure or distressed properties. And now sitting in 2021, as you can see, from 16, 17, 18, 19, 20, 21, it took us a very, very long time on a decline that really, unless we start to see 2023, 2024, a incline, just like you saw in 05, 06, but really that big jump in 07, a lot of people could have predicted what was going to happen just taking those 3 years. So again, we'll continue to follow this, but overall, if you take it from a statistical average, well, it will read like this. The amount of people based off of those with mortgage properties is that number is sitting at 0.4%, meaning 0.4% of any of these loans are sitting in some form of default rate. And the rate that most banks and lenders say they would like to be at a minimum is 1%. And we're half that number. So just in the highly regulated lending industry, we are already doing or outperforming a much safer level of performance and that of people with defaults. So again, U.S. foreclosure activity continues to increase quarterly, nearing pre-pandemic levels. Well, let's just go back again. Pre-pandemic levels, all right, were only 600, 624, 493. Then we got to the 214 in the pandemic. So remember, we've got several years to continue to monitor this number. And when you see headlines like this, that's what's leading people to thinking it. And unfortunately, headlines usually do more to harm, all right, or hurt than they do help. So thank you for giving me 20 minutes of your time once a month. I hope I continue to help. And to all our families and friends, we look forward to hearing more about what your time frame is on what you want to do with real estate. As we know, it's still a very good time. And as you can see here, housing supply is still historically low. As you look at the inventory of the week ending October 28th, what this is saying over the last 3 years is yes, all right, our inventory is up 40% now than it was the year before or the same week in 2020. But at the end of the day, looking at the same week in October as of 2019, we still have almost half the homes available, 37% less inventory, which obviously leads towards, remember, 4 months of inventory is that of a neutral market, anything under a seller's market. And in Colorado, as you can see from the Midwest West, is that inventory still remains very, very low. Leading to the question, should I buy a home right now, is, well, you have to look at it twofold. If you own a property, there's a lot that goes into the question of how is your local market and your exact home impacted based off these conditions. However, if you don't own a home, well, there's always a reason to buy, and that's because rent continues to rise all the way since 1988, every single year, and that of year after. You will see over certain periods of time, there's one consistent theme, which is renting is going to cost you more, and unfortunately, as we already identified, being smart, and what really means is what should I do, is you should find a home that you love that works within your budget, and if you can do that, then there's never harm in buying a home as long as you practice safe loan guidelines, which that is exactly what we have done, which is why very few of those loans are in default, is because we are not going to go through another great financial crisis. We are going through, all right, a recession, which has happened many times. The mortgage crisis has only happened once. Now, let's take one last economist's opinion. If you can find a house that meets your financial expectations for a monthly payment and is a good time for you to buy, then do that. And if you wait for prices to fall, but they never do, you may discover the hard way that the house that you found a year ago that you really loved, that you could afford, but you passed up on, is more expensive next year. This is really where we close our market update, because it's not my job to tell you to buy or sell. It's my job to make sure you're an expert on what's happening in the industry. Maybe not an expert, but you get to listen to one like me, connect one-on-one anytime you would like. Feel free to schedule a 15-minute consult or refer any family or friends across the nation. I'll get you connected with the top 1% of agents in America. And as we start looking at, in the absence of any trustworthy or up-to-date information, real estate decisions are increasingly being driven by fear, uncertainty, and doubt, or just what everybody else is choosing to do. And unfortunately, Almost 40% of people who are rushed to make a decision over the last couple of years are not happy in the current home they're in. So take your time, but don't put it on hold. Wait, research, connect with local professionals, and the unfortunate part is these decisions can be hugely consequential for consumers and businesses if we hurt through just getting attraction with headlines and we don't help through educating people with data. And so as you guys know, we're approaching winter. We'll send you all our seller guides so you have this information, but most importantly, you have our information. And if you're ever in need of help, questions being answered, as you know, we love keeping you current. It matters to us, but what matters to you is more important. So have a great holiday, and we look forward to talking to you on next month's Market Update.